Okay, so let's kickstart today's session, right? So for those of you guys who just joined us, we will be covering on price action trading today. So over here, we will be talking about market structures as well as trying to identify demand supply zones and how we can trade off these levels. So just a quick introduction of myself. I'm Lee Sing. I provide FX advisory to institutional clients. You can also find me on LinkedIn, right? So if you have any questions with regards to the recordings, right, please do reach out to me on LinkedIn. So just a quick disclaimer before getting the session started. The information presented here, it's not to be treated as investment advice. It's for educational purposes only. So this is the agenda that we will be covering for today, right? So first we will be covering on how we can use different time frames across our analysis, right? So going on to TradingView, looking at different time frames and how the market structures come in play. Following that, we will also take a look at how we can identify supply and demand zones, right? So how we can use these zones as our entries, stop losses and profit targets. And then finally, I'll be covering on risk and trade management concepts. So before we hop on to the charts, right, let's just understand a bit more on market structures. So in general, if you load any chart on TradingView, right, you can see that markets can be seen in these three frames. So the first one is an uptrend where market is forming successive higher lows and higher highs. So this is roughly how it looks like in the diagram, right? So you can see that prices starts forming successive higher lows, higher highs. And in an uptrend, what usually happens is that you can see the lows itself would hold, right? So they're not usually being violated, and any pullback in price, right? So if price comes into a support area over here, right, any pullback in this zone could see more upside. So likewise, right, these highs themselves, they are constantly being run. You can see that this highs don't hold in an uptrend, which also means that if price comes into a resistance area and an uptrend, right, we need to wait for the lower time frame confirmation before taking any shots, because by default in an uptrend, right, these highs are the target, which means that they'll be useful with opening long positions and using this as the profit targets. But if you want to sell from these areas, then these are zones where we need to wait for a change in trend on the lower time frame. Okay. So this is an uptrend, and this is an example of how it looks like on the chart, right? So if you have any difficulties in trying to identify the overall move, right, just you can switch it to either line chart or just take a look at the peak and troughs. So what I can do, right, for a start is to just take a marker, highlight the peak and troughs, right? So what we have here, and you can see that the peaks are highlighted in blue and the troughs are in gray. So you can see successive higher lows and higher highs that are being formed here. Okay, so let's take a look at the next slide. So the next slide that we have, right, this is in a downtrend. So you can see that likewise in a downtrend, market will form lower lows and lower highs. Oops. Right, so in a downtrend, market forms lower low and lower high here. Right, so we have successive lower lows and lower highs being formed, and that's what you see in the diagram to the right. Right, so what happens in a downtrend is that assumption is that price would continue in the direction of its trend. So any pullback into this zone itself, right, this would serve as resistance areas where we can take sells or shorts from. Okay, so this is a downtrend. And then the next one that we have, it's a ranging market. So for ranging market, right, it's the opposite. So for ranging markets, prices respect both the support and resistance areas. So in general, you see that price would move sideways, right? So both the support and resistance areas are being respected. There are two ways that we can play this, right? So usually would be straddling, basically selling at resistance, buying at support, right? And then putting stop losses slightly above and beyond this zone. But this itself, right, when price range, we can see that there'll be liquidity sweeps. So the idea is that when price comes into this zone, right, there'll be sharp sweeps that take stop losses out before it continues to the upside, for example. So this is something that we need to be careful of, especially coming into a key zone. So in this case, what we can also do, right, the other strategy would be a breakout strat. So essentially trying to wait for a break above or below the range before playing in the direction of the trend. So yesterday we covered on how we can use stochastics as an indicator, right, and how it actually applies to this market structures. So later on, we'll be going on to TradingView, right, not only looking at market structure, supply demand areas, we will also combine that indicator. Okay, so let's take a look at our setup, right? So I'll just explain how we can use market structure. So having the general understanding of how market structure is like. Right, let's take a look at our charts. Okay, so let me just remove all of this. Right, so in general, you can see that on the daily time frame or even on the 4 hours time frame. Right, so let's say this general move here, you can see that prior to this move, right? So in general, when gold has been moving anywhere from March last year to November, you can see that prices are in a downtrend. So you see successive lower lows and lower highs that are being formed, right? And notice that at every pullback, right? So you can see lower lows and lower highs. I've marked out the highs as well as the lows. And you can see that every pullback itself over here, when price comes into a resistance area, right, it just continues to the downside. And any change, right, any sign of a change in trend actually happens when price breaks above the last high. So you can see this area here. So once price breaks above the last high that we have over here, this region, you can see that this would then be our resistance turn support level. A price tested the support before it continues to the upside, right? And following which you can see that with the most recent move, right, price will continue your higher lows and higher highs. And within this leg itself, right, even if you take a look at this leg, so let's focus on this portion of the chart. If I were to go down to the lower time frame, let's say the 4 hours, so the same leg that I've circled on the 4 hours, you can see once again, right, market structure being in play. So you have successive higher lows and higher highs being formed, right? So price came in from a new high over here. So this is the first high, right? So let's focus on the area that's circled in blue, right? So just notice this part. You can see that price came in, broke above, right? So the first break of the previous high, this is the first sign that there's bullish market structure in play. Once that happens, you can see that support areas would then be respected, right? So let me just remove this indicator so we can see this chart better, right? So you can see that resistance and support areas, right? So this is what we went through in the resistance and support series, essentially resistance and support areas where price tested as a resistance, broke above it, came down into this region again as a support, right? So these areas are being respected. And more importantly, it's in line with the higher time frames order flow, right? So you can see on your higher time frame, prices are forming bullish market structure on the 4 hours and all the more on the daily, right? Because price broke above the previous high here. So this is the first sign of a change in trend. And subsequently, you can see that all the following moves, right? So price again, continued higher lows, higher highs. In this case, it pulled back, did not form a new high before it continues to the upside over here. And then once again here. Okay, so once we saw this, right, so once you see this kind of pattern being formed in the market, right, what you want to ask yourself is first, determine the overall direction. So in an uptrend, right, prices, any pullback into a support area, right, price could continue to the upside. So what we want to do with this is to try and identify support zones, right? So there's one over here, right? So support zones are basically support and resistance areas that we want to keep a lookout for. So in this case, this would be one area too, right? So just looking at how price reacted with this zone. So you can see price coming in to test it as a resistance, broke above it, and currently sitting on it as a support. Even if I were to put it in close, right, you can see this area is where I can draw a horizontal line across and it sits nicely on both sides, right? So price coming in to test this as a resistance, broke above it, retested as a support. Okay, so these are zones that we want to keep a lookout for. Okay, just looking at support resistance areas. Right, so if you guys have any questions so far, right, don't hesitate to put them under the questions chat. Okay, so this is how we can look at market structure. So across different time frames. So we've used the daily and the 4 hours time frame, right? So even if you're going down to the lower time frame, right? So once again, you can see the structure being formed here. So price pushed up, right? Slight pullback, and once again, you have this higher lows and higher highs. Okay, so one thing to note is that when I mark out this zone, right, so maybe let's just focus on this portion. Once again, you see this higher lows and higher highs being formed, right? So we have the highs and we have the lows, which I'll mark out in a different color. Right, so notice what we mentioned earlier with regards to the highs and lows. You can see that in an uptrend, right, these highs are not violated. So in this case, you can see that the lows are not violated, which means that each low itself should hold. So any pullback in an uptrend, right, if we are buying based on either 78 retracement or entering based on a support zone, right, putting your stop loss below the structure itself, right, this would be something that you can consider. So in this case, we can see here, right, when price broke above the last structure here, it broke above the last high, and it made a pullback into the support zone. You can see that price held in this zone before continuing to the upside. So if you're entering any positions here, right, we can base it off a retracement. So we can take a retracement from the low to high. So in this case, price came in nicely at the 61.8 retracement, but the idea is that you can either enter 61.8 or 78.6, right? So both works. And then put the losses, the position, right? So where we would be wrong and want to get out of the trade, right? It's when price crossed below this structure, because in an uptrend, the low should not be violated. Okay, so in this case, you can see that once again, right, price continued to the upside. And then what we have over here is that price broke the last low. In this case, you can see price broke the last low, pulled back into this area. This was probably driven by news. So price came in, right, swept above this high. You can see sweeps above this. So if you are trading based on structure, right, I would have entered a sell here as well based on the 78.6, but this wouldn't have worked out because once price crosses above this high, right, this is where I would want to get out of the position before it continues to the downside, right? And then once again, if you move to the left, oops. Okay, so when you move to the left, you can see that following that break in structure that we have over here, right, price broke this low. Price just continued to the downside. Okay, so once again, right, that logic will apply, right? So following the break in structure, so this is the first break in structure, or the break above the last low or support area, right? So depending on how you look at it, right? So if you look at it just based on support resistance, you can see price coming in to test this level as a support, broke above it, retested this region again before it continues to the upside, right? So following this bearish candle, so what this shows is that there is a break in structure of the market, and also this is represented by a strong bearish candle, right? So there's sustained selling pressure coming into this area. So when price comes into this zone, right, and it makes a pullback, you can see that it starts forming your lower lows and lower highs. So the next break in structure comes in here. So price came in, you can see that formed a new high, broke below this area, right? So any pullback into this area, we know that we're in a downtrend, so we're looking for support areas to enter sells, right? So this would be a support and resistance area. Once price breaks below this zone, right? And you can put it in close, you can see the same thing as well, right? So price coming in to test it as a support, broke below, retested again as a resistance. Okay, and then if you move further down, you can see once again, right? Price coming into this region, we have a low. Price broke below it, came into the high, this resistance area here. You can see this high, right? So price came in, right? We have this. Price once again broke this area, pulled back into the resistance area, and you can see here, right? We will only have identified this resistance zone based on what we have here. So without this reaction, right, this zone itself wouldn't have been valid. It's because of this area that we saw earlier, which is why when price broke structure and pulled back into the resistance, right, this is an area you can consider. Okay, and then once again, right, price starts forming lower lows and lower highs. You can see here. And then the first sign of a break in structure comes in here. So recall, right? So you can see again, if I were to just draw this move, right? Just looking at market structures. So price came in, it broke this low, right? So the assumption is that any pullback into this zone, right? If the downtrend is to continue, price should continue forming lower lows and lower highs. But notice what happens here, right? So when price pulls back into this zone, you have a break above the last structure and a break above the last high. You can see that price came into this area, right? And it broke above this high. So this is the first sign that there's a change in market structure. So price broke above, you can see that it broke above it, pulled back into this area, right? So once this break in structure occurs here, right? So when there's a break in structure here, any pullback into this area, right? Right now we're looking at support zones. Okay, so support zones can come in a form of support and resistance area, which in this case would be this area here, right? We saw that sharp rejection before price continues to the upside. So this will be one. If I extend it to the right, you can see that this is a zone, right? If I put it in close, you can see this as well, right? If to just draw a horizontal line across, right? This chart neatly. So in this case, you'll probably experience a slight bit of drawdown here. Okay, so that's one. Another thing that I like to look at, right, would be based on Fibonacci retracement, right? So the idea is that if price is trading within a certain range, so in this example, it's trading, this is the last range, right? So this is the last leg of the move. So within this range itself, right, we're looking at opportunities to buy because there is a change in market structure here. Right, so that's the first sign of a change in direction. Of course, this is on the 4 hours, right? So if price comes into a support area, you can go down to, let's say, the 15 minutes or even the 5 minutes, right, to wait for the lower time frame confirmation. But that's the idea, right? So when price comes into a support region over here, right, you can see that just looking at it, if you don't want to go down to the lower time frames, right, this is the range. So usually I'll take a look at the 78.6 retracement or the 61.8 Fibonacci retracement. Okay, so we covered the Fibonacci series last month, right? So if you guys want more in-depth example on this, right, you can take a look at the recordings on YouTube. Okay, so in this example, right, we saw this move. So this is the low and this is the high, right? So once we've identified this move itself, you can just use a Fibonacci retracement on this move, right? And I'm looking at 78.6 and 61.8 because I think that this retracement levels can be very useful, right? Especially when they're combined with a trend line. Okay, so these are the levels that I use, right? So 61.8, 78.6, negative 27 and negative 61.8 are potential profit targets. So in this example, right, if you are to enter just based off the 61.8 retracement, you can see that this position would be in a bit of drawdown, right? So this is one. You can do if you're doing a 1% on this setup, right, you can do a 0.5% at 0.618 and then another 0.5% at the 78.6 retracement. Accompanied with this, right, there's also an ascending trend line, as you can see here, right? So for it to be a valid trend line, it has to have 3 taps, 1, 2, right? In this case, we wouldn't have caught this, but you can see price broke above it, retested before it continues to the upside. Okay, so once we have identified this, right, just based on the Fibonacci series, this would be the first profit, right, targeting the high, this high here. So I'll put this in a different color. This is TP1, right? The second TP would be based on this negative 27, which is this area here. And the third TP, it's based on the negative 61.8, right? So this areas. Okay, so of course, right, even though we are taking it based on specific levels, what you do want to consider when you are trading is to ensure that to the left of this, right, to the left of this point, if this, so previously we identified this as a resistance area, right? Which means that if negative 27, you can see negative 27, it's lying just slightly above this resistance zone, right? Then you want to consider adjusting your profit target slightly lower, given that this was a key resistance, right? So if I were to extend this across, you can see that this TP is actually slightly lower than the negative 27. Right, so this is something you want to consider, right? So don't just take these numbers in isolation, but ensure that when you're looking at these numbers to the right, to the left of this chart, right, there aren't any key levels that price reacted off previously. Okay, so this is how you can take a look at market structures, right? So this is on a 4 hours time frame, right? So let's take a look at what we have here. So focus on this portion of the chart. So when price broke structure on your 4 hours, right? So this is the first break in structure and it pulls back into a support area here, right? We wouldn't know where exactly would price bounce, right? Because coming into this zone, right? So you can see that this moved down on the 4 hours time frame. If you were to go on to the 15 minutes or even the 5 minutes, you can see that this move down itself, this is actually a bearish move. Okay, so you can see here, right, on the 15. So recall that we are on the 4 hours earlier and I circled this move, right? So you can see that this pullback on the 4 hours time frame, this blue circle that we have over here, right? So when prices are forming a pullback leg on the 4 hours time frame, you can see on the 15 minutes time frame, it's actually forming your bearish structure, right? So prices are forming lower lows and lower highs coming into this zone, which means that if you want to wait for a lower time frame confirmation, we need to wait for price to show a sign of a change in structure here. So coming into this area, you can see that coming into this gray support zone that we have on the 4 hours, we need price to start showing that there is an respect of this zone with a change in structure. What I mean by this is that if prices were to continue in a downtrend, it should again continue lower lows and lower highs, right? Like the same example that we saw on a 4 hours time frame. But the first sign of a change in structure, when price broke above the last high, right? This is the first sign that prices are moving to the upside. Okay, so if I were to just move back slightly, right? Recall the example that we saw in the 4 hours, the same chart, right? Recall this area. So prices continued to form lower lows and lower highs. And you can see that the first sign of the change in structure comes in over here when price broke above the last high, right? Pulled back into a support area before continuing to the upside. So this is a first sign of a change in trend, a first sign that this downtrend could be changing, right? So coming into this zone, right, when price comes into a higher time frame support, if it pulls back into this zone, right, we're using the same logic, right? So given the fractal nature of markets, you can see that if prices were to respect this support area that we have over here, this gray zone on the 4 hours, right, this is the support, then we should see the change in structure happen first. So you can see here, right, where the change in structure happened over here. Oops, sorry for that, right? Let me just remove this. So you can see the change in structure happen here. So again, price starts forming lower lows and lower highs, right? If I to mark out the highs and lows, you can see this area here. Coming into this support zone, right? You can see this is the last high that we have that broke the previous low. So if price breaks above this high, right, then this is the first sign that we could be seeing a change. So you can see that price hovered around this area, right? And once price breaks above this region, pulled back, right? So in this case, this, right, depending on your own definition, right, you might want to wait for a break and close above, right? So personally, I would wait for a break and close above, so I do not consider this a break, but you can see that price just wick above it before it continues lower, right? But in this case, it probably pulled back into a support region before it continues higher. So this is depending on your own preference, but for me, I wouldn't consider this a break. And then what we have following that is that price broke structure, right? There's a real break above the last high, a break and close above the last high. So this is the sign that price has indeed changed, right? And we're seeing that consolidation and the exit of that region. So once price breaks above this area, you can see that over here, right, it starts forming again higher lows and higher highs. You can see this move, right? Just in terms of market structure. Right, so this is the last, you can see here, this is the last move up, right? But price did not break any structures, trading within this range. And then once again over here, right? So the first sign of a break in structure comes in here. You can see that this is the high, right? So if I were to just hover around this, you can see that this was the previous high. Price came in, right? And then it just moved sideways around this area until the first sign of a break of this high came in here. Right, so if you're trading just based on the pullback of higher lows and higher highs being formed, we need to wait for some kind of structure to be formed here. So this consolidation area that we have over here, right? This is an area where it formed the previous high. Following that, you can see that when the break in structure comes in, which is this area, so price broke above this high. Once we have this, right? What you can do again, right? This is the last move up. We're expecting a pullback. You can again take your retracement levels. Okay, so this is the last move, Fibonacci retracement of this move from low to high. Once again, 61.8, 78.6 as the entry, right? So this can be your profit targets on the lower time frame, -27, -61.8. You can even play it to a higher time frame, right? Given that the 4 hours is now bullish market structure. Okay, so it's bullish order flow. So in this case, you can see again, this is the move, right? So this would be, you can do a 0.5% here, 0.5% here, right? So I won't recommend just taking it off retracement levels, right? This can be used as a gauge, but even within this zone itself, right, try and identify support and resistance levels or supply demand areas. So maybe just to share a bit more, right? For supply demand areas, generally, I take a look at how price react off these zones, right? So notice what we have here, right? So I've mentioned before about looking at the reaction between the candles and the wicks, right? So in previous sessions on supply demand areas, right? So I like to just bring this to your attention. So in this case, you can see that price came into this area, right? And you can see this slight hesitation here before it continued to the upside, right? This bullish candle with hardly any wicks. So what this tells me is that when price comes into this zone, right, it's met with some kind of resistance, right? You have either people taking profits or you have sellers, right, who are coming in to push price lower, but that did not work out and then price continued to the upside. So for me, this is a demand area. So you can see this zone, right? So basically the candle that still held within the wick of it before it broke. So I'll just put this in a different color, let's say in blue. Right, so you can see that this was the previous demand area here. And again, right, the reason why it's the demand area is because it's still the candle that held within the wick of the previous candle. Okay. Area. And then once again, when price comes into this zone, right, you can see that consolidation. And then once again over here, right? So price came in, tapped into a demand area here, but it did not break structure. You can see that it did not break above the high. So what this suggests is that this demand area for me still holds, right? So I extend this across, which also means that if I were to put in any entries, right, over here, if I were to put in any entries, I need to consider having my position, right, or ensuring that I will only want to get out of the trade when price crosses below this zone. Okay, but once the break in structure happens, which comes in over here, you can see that price broke above the high. What this tells me is that, recall, in an uptrend, right, the lows are not violated. So once price breaks above this high, what this tells me is that this low itself, right, should not be violated. So any entries that I have, right, within this leg, if price breaks below this low, right, this is when I want to get out of the position. Okay, so I hope that this is clear so far. So once there is a break in structure, you can look for demand areas within the last leg, which is this area here. Right, so demand areas can come in the form of, again, right, the candles that held within the last wick. So in this case, it'll be this candle. You can see this candle here. So again, right, this candle held within its previous candle, and following the move of this, there is a strong bullish candle that we have here. You can see this bullish candle, right, and see what happens here, right? So we have this low, right? So in this case, this might not have been triggered if you're just picking your entries based on this, right? But for me, this would have been a demand area over here, right? If you want to base it on just support resistance zones, right, then it'll be this area essentially. You can see this zone. Okay, based on this zone, right, support resistance areas, if I were to put it in close, you can see that there's this horizontal line that you can draw across that divides the chart neatly as well. Okay, so these are the two areas, right? But following that break in structure, I don't think these entries would have been triggered. Okay, so if you're not taking it based on retracement levels, right, taking it purely based on zones, then this will be the zones for me to consider. Okay, so there are a few ways you can do this, right? But the idea is that first, you need to look at market structures across the different time frame. Try and identify, right, once there is a change in structure that happened on the 4 hours, for example. You can see on the 4 hours, right, the first sign of a break in structure happened here. Once there is that change in structure, this tells us that on the 4 hours time frame, it's bullish, right? So we're looking for any pullback into a support area. And once price comes into a support zone over here, right, we're waiting for again, right? We zoom down to the lower time frame. So support zone can be found by using either retracements or just taking pure support zones, right, based on price action. If you're looking at it based on retracement, right, when price comes into this zone, you want to go down to your lower time frame, either the 15 minutes, for example, right? Let's say the 15 minutes time frame, right? So this zone that we have over here. And once again, right, try and identify structure. So on the 15 minutes, you can see that price did not break past the previous high. And the first sign of a break in structure comes in over here. Right? So following that, it tells me that the 15 minutes is now bullish. And when that happens, right, you can look for the last break above, right, and then wait for a pullback within the last leg of the zone before taking an entry up. Okay, so I hope that this is clear so far, right? And if you guys have any questions, right, do put them under the questions chat. Okay, so let me just bring, right. So in summary, we covered more on the different types of market, right? How we can combine market structures across different time frames, right? Understanding that if prices are in an uptrend, we're expecting the highs to be constant target, right? They can be used as your take profit targets, whereas your lows are the ones that should not be violated, which also means that if price breaks below that structure, right, that's when we want to get out of the position. Okay, so we can see that the fractal nature of market supply, the concept apply across different time frame, right? So this concept itself, right, across the 4 hours, the 15 minutes time frames, you can see that all these concepts are the same, right? So if we're seeing price coming into a higher time frame demand, right, and we're seeing a respect of this zone, we want to ensure that on your lower time frame, right, prices are indeed showing a change in structure before there is, before we commit to any of the setups, right? And then sorry. Okay. Okay, and then I have a question, right? So when to buy and when to sell signal, right? So again, this depends on the market structure. So in general, if prices start forming higher lows and higher highs, and there's a first sign of a change in structure. So let me just again bring up the chart. Right. So if there's a first sign of a change in structure here, right? So I hope that this is clear, right? Let me just edit this. Okay, so previously we covered on 4 hours, right? So you see that prices were forming lower lows and lower highs. And if the downtrend is to continue, right, let me just remove all of this and you see this, right? So you can see lower lows and lower highs being formed, right? So which means that if the downtrend is to continue, price should continue forming lower lows and lower highs. But the first sign, right? So in a downtrend, right, the high should not be violated. You can see that price starts forming lower lows and lower highs, which means that if price breaks above this high, this is the first sign that there is a change in trend on your 4 hours, right? So you can see that the first sign of a change in trend comes in over here. So once price breaks above this, this is the first green light that we're looking for positions to buy. So once that happens, right, when you find this, what you want to do next is to identify support levels where you can enter. So based on the 4 hours time frame, right, following the break in structure, on the 4 hours, right, this is the last support area you can look at, right? So the reason why I identified this as support, again, it's because price reacted off this zone. And then again over here, right? So it's a very clean zone. And even if I were to put it in close, you can see that I can draw a horizontal line across, which divides this chart neatly. So when price comes into this zone, right, I know that this is an area that I want to consider to enter long positions and stop losses below the zone. Okay, so this is one way, right? So I've shared different ways that you can identify your entry. You can base it on either number one, Fibonacci retracements, right? So for that specific topic, you want to look at the Fibonacci retracements recordings that are on YouTube for Vantage, right? So, but the idea is that for retracements, if you're trying to find support, you want to identify the last move. So this is the last move, identify the lowest point and the highest point. So once you've identified that, right, you can use the retracement. Two levels that I look at as entries, 61.8 and 78.6. Okay, but I'm not taking it purely in isolation, not just using these numbers, but rather analyzing first the market structure, right? The market structure has to show a sign that it is changing, because if not, right, you're trying to buy at the bottom of the trend, right? So if you're trying to buy at every low, you can see that it's just a slight retracement before price continues to the downside. Okay, so once that happens, right, then you can take an entry, right, based on the 61.8 retracement or 78.6 with stop losses, right, below, because when price breaks below the structure, this is when we are wrong. We want to get out of the position. Okay, profit target is -27, -68, and the last high. So along the way, if price moves in your favor, you want to ensure that you're doing proper risk management, trade management, right? So when price comes into this zone, right, to take partials and also protect your positions. This is especially because we have so many events that are going on right now, right? And most of them are unprecedented, right? So for example, the banking crisis and maybe sudden announcements, right? Or even interest rate decisions. So all this will cause whipsaws in the market. So we want to ensure that if price moves in our favor, we are doing proper trade management. Okay, so this can mean taking partials on your position when price comes into a key level, doing trailing stops, right? So protecting your positions along the way up. Okay, so this is for buy, right? For sales, it will be the other way, right? So basically for sales, we are looking at a change in trend, right? So for example, here, you can see this region, right? This area here, right? Prices are forming higher lows and higher highs. You can see higher lows and higher highs, bullish market structure. In this case, I'm not looking for any sales, right? Because in the uptrend, you can see that the highs are constantly being violated. They won't hold, whereas the lows are the ones that will hold. So the first sign of a change in trend comes in over here when price breaks below the last low. Then in this case, right, this would have been stopped out. So price broke below structure. So again, right, we're looking at areas to sell. So this area here, you can see that it can be based on this resistance area over here. right? And stop losses above, slightly above this, but this one would have been stopped out. But the idea is that, again, high to low, 78.6 retracement, 61.8, and using negative 27 and negative 61.8 as targets, right? So in this case, this position would have been wrong, but that's fine, right? Because we don't aim to get every position right, but rather in this setup, right, we're trying to get the probability on our side and trying to ensure that if we are wrong on one trade, right, we're not going to blow our account. Okay, so a lot of it is on risk management. So once price comes into this zone, it breaks above, you can see that the break in structure comes in here. When price breaks below this low, right, what this shows is that this is a sign that it's a bearish move because there's an end of this uptrend. Because if the uptrend is to continue, it should continue forming higher lows and higher highs. Once price breaks below this low, right, you're looking at resistance areas to sell. So once again, over here, you can see price broke structure. Right, so once price breaks structure, what you want to do next, take this move, right? This is the last move that we have. Any pullback into this zone on the break in structure, right? Use the retracement level. Fibonacci retracement of this move, you can see that this entry wouldn't have been triggered. So, well, we'll just leave it as that, right? We will wait for another setup. And then once again over here, you can see that there is again a break in structure. Here, right? And price broke above this area. So this is our first signal for sell, right? So basically, right, if you're looking at sells and buy signals, right, again, I hope that these examples are clear. You see that we always look for first market structure to determine the direction. And when that happens, right, if there's a sign of a change, we look for the last move and taking this impulse move, right, you can either take the 61.8 retracement or 78.6 retracement. And this is best if it's lining up with a support area or demand area. Okay, so I hope that answers your question, right, Melasho? Okay, so yeah, so we also covered on supply demand areas, right? So as I've mentioned, right, it's important to look at market structures and on each trade, right, try not to risk more than 2% on each setup, right? So the idea is that we want to get a probability on our side and as much as possible, right, let the risk to reward of this setups like play out in our favor. But at the same time, right, we want to ensure that if the trade does not go in our favor, right, we're not going to be blowing up accounts, right? So we want to ensure that we're always doing proper risk management. Okay, so this means not over risking on one position. Okay, so I hope that this is clear so far, right? If you guys have any questions, right, please do put them under the tab, right? If not, I will just leave this as it is, right? So again, right, thanks as always for staying with us till the end, right? If you guys have any questions on accounts, right, you can sign up for them. Sign up for this accounts at supportadvantagemarkets.com. If not, right, if you want to sign up for the next session, right, just go to vantagemarkets.com/webinars. Okay, so thanks everyone for staying with us till the end, right? Have a great weekend and we will catch you guys again next week. Thank you and goodbye.